Good morning everybody, back with a video about Cathie Wood going on Bloomberg talking about Chinese stocks and also, well, just a little bit about NIO, but let's see if we can learn something about her reasons to invest in NIO. And so I'll play the video and add also a little bit of my commentary.
Cathie, got to ask you about Chinese stocks. You and I have certainly had conversations and you've made investments in, you've gotten out, you've got, and I just want to know where you are in Chinese stocks right now, because we've seen quite a bounce back in the last couple of days, still down a lot if I look at something like the NASDAQ Golden Dragon. Would you be committing new money? Do you have faith in Chinese authorities actually making Chinese companies much more transparent for U.S. investors, especially when it comes to financially sensitive information?
Well, I think that the government is showing that at the margin, it's going to make moves, but they're going to be marginal moves. In this case, I think there are 3 years to comply with our audit requirements. So they're talking that they're talking, and so we'll see what happens. Common prosperity to us means.
Okay, before we jump into common prosperity, here are the comments around this whole delisting issue, and obviously Cathie Wood and ARK Invest are not too concerned around this issue. It seems otherwise they wouldn't have taken any investments in Chinese stocks so far. However, what she's outlining here is that yes, this is a 3 years grace period and that right now there's lots of talking going on. But I would argue since last weekend actually we have a little bit more than talking going on. Actually, the Chinese side is already in the progress of changing actual legislation. So changing regulations and law are of course actions and not just talking. And so I guess it takes a little bit more time to see if this could also instill more confidence also for ARK Invest and Cathie Wood around this whole legal situation.
High profit margins are not a good thing. And so we have steered away from anything with a high profit margin. And we have focused on those companies and we've in our flagship strategy, we're out completely. We've shifted towards something like C Limited in Singapore. But in more specialized strategies, we're looking for very low margin companies that are consistent with common prosperity. Really distributing goods and services into lower tier cities, for example, or providing transportation. So XPeng, NIO, we have bought their very low margin. It's all about next-gen transportation in a world where, human-driven cars are still, relative to the eligible drivers, still very low percentage. So we're interested there. JD Logistics in the logistics area using drones, lots of innovation. They're doing a lot, again, pushing into the lower tier cities. So we're a bit gun shy. We don't think that the Chinese government is thinking very much about treating capital well, but we know there are huge opportunities.
So here Cathie instantly switches to the topic of common prosperity. And I think this is kind of the mainstream narrative that she is picking up here, and kind of a stereotypical thinking around the real meaning of common prosperity. I'm not going much deeper in this video right now because that would be too much of a scope. However, I think it explains her reasoning, how she's making decisions around China right now. And she's basically saying like, well, don't invest in companies with high gross margins, profit margins. However, well, that is a little bit of a mixed story here as well, because I would argue that NIO has actually comparably high margins. And if you're investing into NIO, and she's for the first time mentioning NIO explicitly here, then of course you are also investing into the more affluent user groups in China, the more premium to luxury segment, and you would certainly want to believe that this segment can actually prosper. However, it also is in the area of how she talks about transportation in an area where common prosperity by her definition also applies in terms of sustainability in order to change to renewables, to foster a carbon neutral economy. So those things should possibly align with NIO. About the gross margin aspect, I'm not so sure really, and also would actually really question the whole narrative around this common prosperity thing and actually trying to boiling things down to the margins only. However, of course, the investments taking in those industries that are obviously not hurt too much by regulation right now makes a lot of sense. But then again, well, she's mentioning here JD Logistics, which I think is also a very interesting company and fits into the pattern that she mentions. But then why not investing into something also like Meituan, which is also doing robot deliveries and has also, let's say, lower margins, if you will. So a little bit of inconsistency there, but you can see clearly that there is still, not that much trust, not committing a lot of capital. So this is a clear statement, and that is certainly due to the fact how she outlined that the Chinese government is not instilling this confidence in investors. And clearly, I think there is reason to understand that based on how they have treated, for example, the educational sector.
Consistent with common prosperity. And so we will have an allocation, but until things change dramatically, meaning more of friendly to capital, we'll probably keep that exposure pretty low.
Hey, Cathie, one thing, I mean, you and your team are very good about research, right? And you open it up to the world and you want to have these conversations. I am curious, when we look at the world, specifically what's going on in Ukraine and Russia, China's relationship specifically with, it seems like, wanting to continue some kind of relationship with Russia. How is that problematic, do you think, for investors going forward and ultimately Chinese companies? And is there kind of a rethink on what our global markets ultimately will be like longer term? You are a longer term think individual.
Yes, yes. Well, one thing I do know about China is it's a survivor, and it really does want to be, it really wants to be in the lead in terms of innovation. So we, given our sole focus on disruptive innovation, are not going to dismiss China. But these geopolitical strains are not going to be good. Again, it's capital unfriendly. We do know that innovation solves problems. And
that part is actually my key takeaway of the entire interview, because I think it's really positive, and because it also shows very interesting thinking from investors' point of view, I would say, meaning that China is perceived as a new innovation country, and it's not gonna go away. So as an innovation investor that Cathie Wood and ARK Invest are, they certainly cannot dismiss it at some point. However, there are, as she outlines, still political obstacles, capital unfriendly obstacles, and well, we still have to see like which sectors are investable in their views, right? So that's good to understand this better, I would say. And then additionally, the interviewer also asks or basically highlights the strength of ARK Invest, which is the research base. And this is actually where I would love to see some action also from ARK Invest side, possibly in the future, that they actually extend their research more to China, maybe having a local office on the ground, having an analyst team that is speaking Chinese, that is also literate more about these concepts of common prosperity, the effects on the economy, having the feet on the ground, speaking to the CEOs on the ground, and things like that could, I think, instill more intrinsic confidence also for ARK Invest, hopefully, to understand the investment landscape in China. And then ultimately, that's also my sense that I get from this interview. She's really looking to where are opportunities, where can I make profits at some point in time. And so she surely is smart in that regard, and looking at it at like when will be the right time to enter, right? So yeah, these are my takeaways. Not much really of an explanation towards NIO, or at least for me, it doesn't really explain why they have invested in NIO, other than that is operational in a sector that shouldn't be harmed by common prosperity. But other than that, once again, I mentioned in my last video, it's cannot be explained from what I've seen from the ARK research, and also this whole talk about the gross margins really doesn't explain it in my views as well. Either way, let's have a look how this will continue to play out in the future. It seems Cathie Wood and her team are watching China, and then we'll see what kind of conclusions they'll find when we have more news on delisting on the policy side, geopolitics hopefully going away, and hopefully Chinese companies continue to be innovative. Anyways, thank you guys for watching and see you in the next one.